virtuous wealth manager, to chair this appropriate session. Thank you. Scott?
Hi, good morning, everyone. As Iqbal said, we've got a distinguished panel today, quite varied and diverse. We've got forestry, London property, and global sustainability. So should be an interesting panel. Ian from Ecofolio, who's the founder and CEO, is going to do a keynote and maybe talk for 15-20 minutes about the fund. And then what we'll do is we'll have a panel discussion about trends, sustainability, and then we'll open it up to a Q&A. So without further ado, Ian. Okay.
Thank you, Scott. So, thank you, Scott, and good morning, everybody. It is an absolute pleasure to be back here. We were speaking last year. I'm founder and managing partner of Ecofolio, and since I spoke to many of you last year, a few things have happened with us. The first thing is that we've moved to Luxembourg, and the second thing is that we've probably had the kind support of the European Union in the Horizon 2020 program and the Climate Accelerator. Ecofolio, we call ourselves a mission-driven fintech company, and we've made it our mission to make the forestry asset class more investable and liquid. Okay? The title of my talk today is Forest Sukuks as Stable Impact Assets. And the one thing that I'd like everybody to take away today is that forests and nature more broadly is the next frontier of, we believe, is the next frontier of financial innovation. Okay? So, before I start, just a show of hands. How many of y'all here are investors of any kind? Okay, keep your hands up. For the people with your hands up, how many of y'all care about climate change? For those people with their hands up, I'd like you to take away this number. That a 4% increase in forest cover every year neutralizes 100% of all CO2 emissions from fossil fuels. Usually when I talk about this, people are struck about how finite this number is and how achievable this is in our lifetime. If you express this as a portion of global GDP, this is about 1 to 1.5% of global GDP, and we have neutralized 100% of CO2 emissions. I believe this and the investment dimensions of this is the next most exciting investment opportunity for our times. Another show of hands. Any forest investors in the room? Good. More potential customers. So, just to take it back on a little bit of history, right, for people who have not seen or looked at this asset class. Forests have largely been probably one of the oldest and most uninnovated portions of financial markets. It began in many countries as a concept of communal ownership, that it's seen as the basis of communal resource for production of things such as furniture and paper. And as you start moving towards near the Renaissance, forest is really seen as a produce for things like warships. It was really one of the key drivers of the Renaissance and war. And a large amount of ownership was really centered around nobility ownership. Moving forward during the Industrial Revolution in most of the developed world, forestry ownership was really about powering industries, particularly paper and pulp industries. And what really happened since the 1960s, beginning in the 1960s, going to the 1980s, is this sense where the paper and pulp companies were really divesting from these long-term assets, and consequently, other institutional investors like pension funds were very happy to take them on because it fit their long-term mandate. We believe that this is not quite enough. We believe that this is a market that's really ripe for innovation, using mechanisms that is well understood into a community like this. securitized debt, and Sukuks. We're looking at the opportunities around long-term permanent capital vehicles, and particularly with an emphasis that we think is a focus of our times, which is low fees and access to a much broader market than it is traditionally accessible to using a private equity structure. Still with a little bit of history. What you see here is a risk and return curve from the Swiss investment bank UBS. On the x-axis, you see liquidity estimates. So towards, on the left, you see deposits and government bonds, highly liquid instruments, and consequently also lower yielding. Somewhere in the middle, you see small cap equities and all the other things that a lot of people in this room deal with. And on the far right, what you see is timberland sitting very uneasily next to private equity and venture capital. High yielding, but highly illiquid investments. Our challenge is how do you take something that's in the far right of this bucket and innovate it and make it more liquid. Given looking at the risk and return curves, it would actually look at outperformance. The key return drivers in aggregate for forests, they're generally three. And I'll talk more specifically about how these break down across geographies. This is real estate, make no mistake about it. Forests are specialty real estate that produce commodities. You see this green portion of it? Roughly around 2/3 of forestry return drivers come from the fact that you've bought a seed, and over time, nature takes care of it. And at the end of it, you have a tree that is a resource. About 2/3 of the value appreciation come from biological growth. The light blue portion on the right, that has to do with something that economists call the commodity super cycle. The fact that the global middle class is growing, and subsequently the demand for forestry produced products like paper. And also reflective of the fact that we lose about 1% of forest cover globally every year. The last bit of it is land price appreciation, because these are real assets. So, what is truly special about this kind of specialty real estate? I would like to sum it down, distill it to around four essential aspects which I think are truly special. As the saying goes, trees do not read the Financial Times. Whether you're on a boom cycle or you're a bust cycle, if the tree is standing, trees grow. The beautiful thing about this is that, especially in times like this, when we're looking at a macroeconomic environment that's unstable, we like the fact that a lot of this value is deriving from fundamental growth. These are real assets. As a wise man once said, buy land, they don't make any more of it. Now, the third thing about this, which is many of you all in the room might like, is the idea of optionality. This is just a really fancy way of saying that if you find yourself in the middle of a down cycle where timber prices are depressed because it so happens to be on the back of a recession, you just leave the stand on there and you wait till the economy recovers and then you cut. So the trees are growing, your investment is stable, and you ride out till the next boom cycle. Consequently, a side effect of this is that forestry and timberland is not a structure that is very friendly to using leverage. Because if you put any sort of debt obligations or leverage on the product, you lose one of the key features of it, which is optionality. As many people in this room will also understand, the fact that you do not have traditional leverage on the structure is also why it makes it very suited towards a Sukuk structure and Islamic and Takaful markets. The last thing I'll talk about is probably already imminently obvious to most people. This is one of the few asset classes which actually present negative carbon emissions. The science behind forests are the mathematics is determined by science, that 3 tons of wood take out about 11 tons of CO2 just by very fact that they exist. So, I would like to give you folks an overview, all right, on the risk and return drivers of this one asset class. And I get this question a lot. Ian, what are the returns on forests as if this was a single asset class like gold? And the short answer on this is that you actually see this is 3 very different kinds of products, and the only relation that you have from an investment point of view is that there's trees and there's land. It's a little bit like saying, you know, the market for real estate globally. What kind of returns do you have? I mean, the short answer is, where is it? The same thing is true for forestry. Take a look at this, and over the next 5 or 10 minutes, I'm gonna come back to this and ask you which one, just a show of hands, which one is interesting for you? Okay? I would say, let's call them Sukuk number 1, Sukuk number 2, and Sukuk number 3. And these are 3 very different kinds of products. Sukuk number 1 is a developed market forestry product that has a low risk profile, has a return potential of somewhere between 2 to 6%. And if you look at that return drivers, those bars, the reds, the greens, what you see is that, if you can see it up there, that a big part of the developed market forestry product derives its returns mostly from land price appreciation and biological growth. The key markets on this are in the US, Europe, and Australia. The emerging market product, which by the way only represents in institutional investment terms, a real small but growing minority of forests. Just to give you an idea, if this is about $175 billion globally of institutional investment, only $1 billion of institutional investment is in emerging and frontier markets. In there, you see both the breakdown in capital market allocation, and you also see the opportunity. When dealing with Sukuk number 2 in emerging markets, you have a risk and return profile of somewhere between 6 to 10%. And you start to see this yellow bar. In financial terms, it's what we call alpha, which really refers to the skill and active management of the person managing the plantation. You would see these plantations mostly in Central and South America and Southeast Asia. And where we feel in the long run we can really create a really large impact is in Sukuk number 3, which is frontier markets, including conservation-type projects, and what we also known as green fields. The fact that land that has totally no standing forest on top of it. If you allow, I will come back to this, and I'd like you to think about which kind of products would suit your risk and return profile after this. To give everybody a sense, dealing with Sukuk number 1, what does a low-noise, secure investment in forestry look like? Just to give everybody a flavor, you would look at a product at the south of the US, southern yellow pine, which is probably one of the deepest and most mature forestry markets in the world. And since it's in the south of the US, have very little exposure to foreign currency risk. You would use the offtake for the wood is pulp and sawn timber. And this is also a place that if you wanted to get insurance on your investments, this will be possible. However, a little bit costly, and this I also see as an opportunity for a lot of Taka food providers. So, our idea behind a low-risk product which derives most its value from photosynthesis is to build a diversified portfolio of blue-chip assets maybe a third roughly in the US, a third roughly in Europe, and a third roughly in Australia and New Zealand, which gives you exposure to Chinese demand. The longer-term view to raise return expectations, if it becomes a much larger sukuk, it would give us the ability to invest in slightly riskier and impact-type investments by planting new trees. And also, we would manage this fund, potentially, to be low-cost, tradable, and liquid. Think about this. The second category will be an emerging market forestry impact fund. The play here has something to do with, they're probably in Central and South America. We only look at forestry assets, no sawmills, with species like teak and eucalyptus that take about somewhere between 8 to 20 years to mature. This is where we believe that a sukuk structure that allows for intermediate liquidity would allow investors to realize their returns without traditionally having to wait till maturity. Because forests in emerging markets, photosynthesis happens about 2 or 3 times as fast as up north. You would have accelerated potential for growth, with fundamental biological growth accounting for about 7 to 8% per annum, taking out significant amounts of carbon in the process. And the last bit is that a lot of this wood will be shipped off to more traditional markets, ensuring that you have a good return on your investment. The last category is for probably the most impact-minded of all investors. It is the riskiest, but also exhibits the best possible return, where we're looking at forests in Southeast Asia, Africa, or tropical natural forests, standing forests that are natural. With these kind of investments, you would probably need a sawmill and vertical integration to capture the full value, because a lot of these markets do not have the requisite infrastructure for you to be able to monetize your forest. This is also the category that you see the biggest breakdown in capital allocation, and also the greatest potential, I believe, for reinvention and creating impact on a global scale. So, coming back to this, just a show of hands, you can vote more than once. How many of you would say that you'd be interested in sukuk number 1? Interesting, roughly a quarter to a third of the room. Sukuk number 2? About an equal number. Interesting. And sukuk number 3. Wow. An interesting observation is that we have about equal numbers for sukuk number 1 and 2, but it seems that sukuk number 3 seems to be most popular with this crowd. That's very interesting news for us. Okay. I won't take up too much of the rest of the panel's time. In summary, I would like to say at Ecofolio, we're focusing on creating liquid secondary markets for these sort of sukuk investments to be settled using a blockchain-based settlement infrastructure, which allows enhancements of liquidity and tradability before time, but it's strictly not a prerequisite for the sukuk structure. If this is interesting to you, or if you'd just like to find out more, please come and talk to my team, Reza, a familiar face here in Takaful, or Espen, my co-founder, who's probably one of 5 people around the world who specializes in frontier market forests. I'll be here most of today. Axel is building our technology-based system. So even if you just wanted a broader conversation about the asset class, please come and talk to us. Thank you very much for your time and attention.